Hello traders, this is ICT Mentorship here on DDT Stacks, and today I'm going to show you liquidity and some few types of liquidity. But today I'm going to go through just two types of liquidity. The others will be in another video. And so, what is liquidity? Liquidity is simply money. So, money in the forex market. And liquidity graph is when buyers or sellers, in general, I would say retailers, are taken out of the market. So that is what we call liquidity graph. And now in this video, I want to show you how ICT smart money concept or institutional traders understand liquidity and how they trade according to liquidity. Simply put, smart money, they buy whenever retailers sell and they sell whenever retailers buy, because buy stops will be resting and then we just take them out of the markets when they are stop loss. So moving up to liquidity, let's look at one type of liquidity, which is liquidity pool. And to cut this video short, if you're new to this channel, welcome. And if you haven't subscribed, kindly subscribe, hit the notification bell. We learn forex and we trade forex here on this channel. So what is liquidity pool? Liquidity pool resides just above previous highs and below previous lows. So as usual, smart money will fake out or will fake a breakout for these levels to take out stop loss, and pretend others, but they won't maintain the overall direction. So they create fake outs and then take traders or retailers out of the market. And when you open your chart, the first thing you're going to ask is, where is the money? So for a buy trade, you see swing lows that are potential for stops to be placed there. There is where the money is. And for sell trades, you see swing highs that are potential for stops to be placed there. That is exactly where the money is. So wherever buy stops and sell stops are rested or the rest, that is where money is. So liquidity pool, let's look at this image. It's just an image. I'll take you to the chart. So this image we see right here, so as you can see, we were in some kind of consolidation right here. Okay, and there we have this bearish spike to the downside, and then price went back again, another bearish. So here was an old low, and now price broke that low. Here will also serve as a support. So price broke that low, yet it and made a fake. That was a fake breakout, and then took out all sell stops which are lying here, took them out, and then went back again, and then to take profits from the side, the green zone. And for the green zone too, this was a resistance. It's run above the resistance and took out buy stops. Buy stops were lying here. That is, retailers are going to say, oh, the market is in an uptrend, so let us add more buys. And then they add buys, put their stop loss around the side, and then the market takes them out and goes in the opposite direction. So that is what we call a liquidity pool. So hope you've understood this. We'll go to the chart to identify a liquidity pool. So what is a liquidity void? Liquidity void is a range in price delivery where one side of the market liquidity is shown in a wide or a long or a spike, range of candles, and price typically will want to revisit that zone again. So on that side is where money lies a lot. There are huge monies or liquidity lying at that zone. So we'll also look at the picture and then check out on the charts for a clearer view of it. So the market will always slip to only available trade levels as a result of thin liquidity, and this voice in the liquidity will be revisited at a later time. Markets will also seek to fill in any gaps or missed levels from trades, impulse price swings that are typically seen with these voice in liquidities. This will take us to fair value gaps. I'll take you there in another video. Liquidity voids is also when you see burst move or a very more long without a pause after consolidation. So that is something like an imbalance. Yes. So let's look at this diagram of liquidity void. So you can see the first diagram right here. We have this huge, bullish candles. So these huge bullish candles will be known. You can see, so these are all green candles that the buyers are very much in control. So it has caused an imbalance right here. That is the liquidity void here. So liquidity void and the range. So this is the range of the liquidity. The second image right here is going to show us that yes, money lies here. So retailers are always going to buy because the market is an option. So let's buy. They buy, they put their stop losses around here. That's more, buy stops. And then definitely for institutional traders who say no, retailers are buying, we are going to sell because anytime retailers buy, institutional traders sell. So they are also going to look for, you know, the pairs are going to come in to grab this liquidities and fill this liquidity range. So you can see in the next picture, after this, you can see the bears came all the way to clear all this liquidity and they filled the range. And then after clearing the liquidity to the side, now the market went upwards again. So buy stops all buy stops line here will be taken in as well. For the downside, where you can see this line, all sell stops, as price was coming down, people were saying retailers will be like, yeah, the market is coming down, let us sell. And they are going to sell and put their stop losses around here, put their stop losses around here, and then poof, the market clears them. So this is what we call liquidity void. Now let's go into the chart to identify liquidity pool and liquidity void. So this is liquidity pool on GBP CAD. So we have this trade currently in section that is on the daily signals we have, and still moving up. So let's see this thing. So we see we have a very strong support zone where price is failing to break it even from the daily and the weekly perspective. Price is failing to break this. And now you can see clearly from here, we got to this point where price broke the support, broke the support. So there are going to be sell stops, lying here that, oh yeah, we had this long candle, bearish candle, and then it broke the support right here. So let us sell. So they're going to issue a sell execution and then put their stop losses right above the support right here. So something like this. They're going to put their stop losses around here. And then they decide to sell because we even have this red bullish and red bearish candle, so they decide to sell. And now they're selling, you can see price came and then came here and then took out their stop losses to the top. So this is how retailers are taken out of the market with the use of liquidity pools. And as well, we had another, the sellers or the bears were still in control, and I had another breakout from here, broke out. The next candle, 4 hour candle, also was a bearish candle. So yeah, retailers will be like, yeah, the markets, the bears are in control, let us sell. So they're going to sell and then still put their stop losses around above the support. And then smart money comes inside. Institutional traders or banks come inside. So they will rather come here with a lot of money, push the market up, and take out their stop losses. So you can see from here, retailers are taken out of the market. So this is what we call liquidity pool. Money are lying here, stop losses, as a stop losses are sell stops are running, are lying here, and they are taken out of the market. So this is liquidity void, and you can see it took them out of the market, and we have this spike or this run to the top. Now let's look at liquidity void as a sample of liquidity void. So same on this chart, we can clearly see the bears are really in control here, and we have this strong bearish movement to the downside with all red candles signifying an imbalance. So with this here, money lies here a lot. There are more sell stops because yeah, the market is in a downtrend. The bears are in control, so let us sell, and sell stops will be lying all around this place. So this is what we call a liquidity void. And so liquidity void or liquidity will be taken when the bulls or smart money calls a retracement and clears all sell stops out of, or all retailers selling out of the market. Okay, so we can clearly see after this, to this side, the bulls came out. First, they came here, cleared all sell stops here, came down again here, and now cleared all sell stops here, even to the side. So from this range, so all money or all sell stops lying in this range are taken out of the market. So this is what we call liquidity void. And so for retailers, they are always taken out of the market, but for ICT and smart money concepts, knowing this, liquidity types is going to help you perfectly. So you know, you don't be taken out of the market. So what you have to do is to wait for a low to be formed before knowing the direction of the market. That is just the simplest advice in order not to be taken out of the market, because sellers are in control and everyone will be like, yeah, they're in control, let us sell, you know. So someone is going to sell from this side and to this side. Still, there are more bearish. Someone is going to sell, then the market just takes them out of the market. So, this is what we call liquidity void. And there are more videos ahead. Just kindly subscribe, hit the notification bell. Join my Telegram channel, the link is below in the description. Don't miss any of my videos. Thank you.